Welcome back to Trading 360. I'm Diane King Hall, live from the New York Stock Exchange for a preview of the Fed and trends in ETF space. I want to bring in Todd Rosenbluth, the head of research at Verify. Todd, thank you so much for joining us today. Let's talk about the setup for the Fed really quickly before we get into these trends that you have about how ETF investors have been positioning. What are you expecting in terms of the result of the Fed's latest meeting today?
So I think the consensus is, and we agree with it, that there'll be no change, but it's possible that the Fed is setting the stage for rate cuts in the latter part of the year, whether it's September or it's in the future. Obviously, the economic data is subject to change. I think the Fed doesn't want to move too fast. ETF investors, however, have been doing just that.
Okay, so ETF investors have been doing just that. What do you mean by that? Like, how have ETF investors been positioning ahead of the Fed's decision on rates today?
So we are on another record pace for ETF flows in 2025, and that's also the case for fixed income ETFs. We're over $200 billion of net inflows. That would break the record that was just over $300 billion. In 2024, we've seen investors mostly focusing on the short end. So SGov, which is an iShares ultra short treasury bond ETF, has been the most popular ETF. But we started to see in July investors take on a bit more risk, more on the credit risk side. So we saw exposure to high yield, USHY being among the more popular ETFs, and then actively managed ETFs that are more income oriented or sector or multi-sector focused. So PYLD from PIMCO has been one of the more popular ETFs, actively managed ETFs that we've seen in July.
When you talked about those record inflows as it relates to fixed income ETFs, what's driving that demand?
So I think investors are increasingly comfortable in using ETFs to get exposure, whether that's to protect the downside on the short term with something like SGov, or to take on additional credit risk or interest rate risk. So you could get exposure to the aggregate bond index using ETFs in a very low cost manner. You could benefit from the active management capabilities that PIMCO and a number of other firms like T. Rowe Price and Fidelity bring to the table. There's lots of different use cases. And we're also seeing investors use ETFs to get income in other more creative ways in the last couple of years.
I want to get into that, getting income in other more creative ways. Do you expect that trend to continue, especially when you talked about that SGov, the ultra short bonds?
So we do see demand for fixed income ETFs remaining strong and likely to persist heading in to this Fed meeting, heading into the future Fed meetings. But we're also seeing strong interest in covered call ETFs. So these are ETFs that generally provide equity market exposure, but then offer income using options. So we've seen JP Morgan being one of the leaders in that space. They have a product like JEPI, JEPI, that is the largest of those actively managed ETFs. But firms like Goldman Sachs that has GPIX is a good example of that. NEOS has an ETF, SPYI, that we've seen. Both those funds have gained in popularity, and we've even continued to see new developments. We had a suite of ETFs from State Street launched today, offering covered call exposure.
And then, Todd, what does that tell us, what does that tell you about investor sentiment?
I think investors are looking for stability and income, whether that is through a traditional fixed income wrapper or getting exposure to traditional bonds, or they're looking and comfortable in using options-based strategies. So we've got some of the leading firms that now are offering options-based strategies to get exposure to the S&P 500, or in the case of State Street, you could get the sectors. So you could just get exposure to the technology sector stocks within the S&P 500, but with the benefits of income. So I think it's a great time to be an ETF investor. Lots of great choices.
So you say it's a great time to be an ETF investor and the choices you mentioned. What does that suggest about expectations for trends for the balance of this year overall in the ETF space?
Well, I think we're going to blow away the record of net inflows that we hit in 2024. We're on pace to do that. That was just over $1 trillion. I think we'll pass that again. we're going to see continued adoption. Investors, advisors continue to gain comfort in using ETFs, whether they're actively managed or index-based. And we've also seen, even just going down one additional example for stability, the Alerian MLP ETF, AMLP, which gives you exposure to those energy infrastructure companies, above average yield, traditional equity exposure, without having that enhanced income, very attractive yield. We think that's going to be a going popular fund.
All right, Todd, we will leave our conversation there for today. Thank you so much for the latest on trends in ETF flows and your